Continuing obligations for BVI private investment funds. Fund policies and arrangements. A PIF is required to maintain a valuation policy setting out the applicable procedures for the valuation of fund property, the preparation of reports on the valuation, and setting out the mechanisms for sharing valuation information with investors. Valuation policy. A PIF must ensure that the person appointed as its appointed person values fund property in accordance with the valuation policy. A PIF should also have a safekeeping policy and adequate arrangements in place for the safekeeping of fund property. Safekeeping policy. On an annual basis, a PIF should review its valuation policy and safekeeping policy to ensure compliance with BVI legislation. Maintenance of records and financial statements. A PIF must maintain records that are sufficient to show and explain its transactions, to enable its financial position to be determined with reasonable accuracy at any time, to enable it to prepare financial statements and make returns, and, if applicable, to enable its financial statements to be audited. A PIF must prepare financial statements for each financial year that comply with the International Financial Reporting Standards, promulgated by the International Accounting Standards Board. UK GAAP, US GAAP, Canadian GAAP, or internationally recognized and generally accepted accounting standards equivalent to the accounting standards referred to above. Anti-money laundering obligations. The BVI anti-money laundering (AML) regime applies to all funds as they are classified as relevant persons under the Anti-Money Laundering Regulations 2008. In addition to appointing an officer to the fund or another individual as MLRO, as mentioned above, a fund will be required to put in place investor onboarding procedures which address typical know your client requirements. Put in place and maintain a written and effective system of internal controls which provides appropriate policies, processes, and procedures for forestalling and preventing money laundering and countering the financing of terrorism. The manual. The manual should be reviewed annually to ensure compliance with AML regime in the British Virgin Islands. Report suspicious transactions to the Financial Investigation Agency, FIA, in the BVI. Report the identity of its appointed MLRO to the FIA. The BVI rules do provide for funds to outsource all and any of these obligations to functionaries based outside of the BVI, such as an administrator or investment manager. Any outsourcing must, however, be documented in writing. Obligations under FATCA and CRS. PIFs are required to register for a Global Intermediary Identification Number, GIN, with the U.S. Internal Revenue Service. Funds are also required to enroll with the ITA. Enrollment for FATCA reporting is made through the ITA's online portal, called BVI Financial Account Reporting System, and for CRS is made by email to bvifas@gov.vg. PIFs will need to identify reportable accounts and start to report the necessary information to the ITA. The reporting deadline for US FATCA, UK FATCA, and CRS is the 31st of May. The information that must be reported under US and UK FATCA and CRS is broadly similar and includes the name, date of birth, tax identification number, TIN, for specified US persons where available, national insurance number, for specified UK persons, where available, jurisdiction of residence, for reportable persons under CRS only, the account number, name and GIN of the reporting financial institution, and the account balance. Some minimums apply under FATCA.